Kamala Harris just dropped details about her tax policy, and I think the implications for crypto could be huge. They could probably actually be very bullish. So I want to have an educated discussion about this on this video. If you're the kind of person that gets offended and, you know, whatever, just leave now. This channel's not for you. But we're not going to be talking about whether her policies are good or not. I don't care. It's beyond the scope of this video. What I want to talk to you about is that if she did get elected, this is what it could look like for crypto. And in order to do that, we have to break down some of the details of her proposal. And so I've got this really good thread up by Money Cruncher. Give this profile a follow on Twitter. And they've mentioned here a kind of summary of Kamala Harris's tax proposal, because there's a lot to go into here. I think there's big implications of where this could take the markets. You know, some are good, some are bad. Let's talk about this. Basically, the main thing that her proposals move in the direction of, as you would imagine being a Democrat, is more government spending and not really being super vague about where that money is going to come from. So, you know, we know as traders, we have a good understanding of this at this point, that, you know, one of the two, you know, the two main ways that the government is going to fund, you know, giving money to people and stuff like that, there's two ways. Number one, it's going to be inflation. Number two, it's going to be taxation, right? Those are like kind of the two of the main ways. And so that's something that we'll be talking about here, because that's kind of where it has big implications on these markets. But, you know, just to kind of break down what this is, we're looking at, you know, kind of more money going back in the pockets of people who are kind of lower down, you know, in the wealth game, I guess you could say. You know, so if you've paid rent on time for 2 years, you can get 25K back in homeowner credit, and even more if you're a first generation homeowner. These are actually pretty cool. You know, how that would work is obviously different. Restoring ARPA, this one's really interesting. Again, this is just more free money going back to people that have children. And what's really interesting about this one, I've got to focus you on this, is that this was introduced after the pandemic. This was introduced in 2021. And the reason that's a big deal is because that's exactly when the markets were pumping like absolutely crazy. You know, if we come back to the Bitcoin chart here, you know, what 2021 had for us was absolutely crazy. You know, I mean, from kind of November 2020, December 2020, when we hit this all-time high at $20,000, we were rallying, setting all-time highs up until April of that same year. And then we continued and continued to set new all-time highs until November of that year. So we only had a bearish summer, which is something that, you know, we've been experiencing this year as well, quite interestingly. In fact, a lot of the times, in my experience, summers tend to be pretty shit in crypto. It just happens to be one of those things. But 2021 was amazing for us in this market, right? Again, I really want you to understand what 2021 meant for the markets, because I don't think people actually, you know, have really looked at this fairly. We had all of this and all of this to make money out of during 2021. I know that a lot of people are very disappointed by how things went, because, you know, perhaps they didn't capitalize on it as much as they wanted to, but the reality is that 2021 had some beautiful rallies, and there were lots of opportunities to make money. And by the way, if you're frustrated at not taking advantage of those opportunities, I can totally understand that, but that is your sign that you need to be learning, you know, and putting yourself in a position where you can take advantage of different you know, environments in the market, okay? Because if you don't, it's opportunity cost. There's a lot that you're missing out on. I've said this before. I said this in my most recent video. You need to watch it if you're not already subscribed to the channel. There is more pain in being a bear than there is in being a bull, okay? And the reason for that, it's very, very simple. I know this is a detour, but we're gonna have to do it. And if you appreciate these kind of insights, do me a favor and smash those likes up. Double check that you are subscribed as well, because this is what we're all about. When you are a bear, you stand to lose, let's say, you know, let's say your trading pot is $10,000. You stand to lose $10,000, right? That's your downside. If you're looking at it from the bullish perspective, let's say you want to get to $1 million. Well, in that case, if you don't fulfill that bullish path, then you're not losing $10,000 anymore. You're losing $990,000. It's a different way to look at things, but it's an important kind of perspective change, because when you see it that way, you start to understand that there's a lot more pain on the side of not fulfilling your potential. There's a lot more pain there than there is pain in losing money. That's at least, that's my perspective. many people that make money think this way. That doesn't mean it's the right way to think, but, you know, I'm just putting that out there. By the way, we're posting more exclusive content on X, so while you are in the description, go follow me on Twitter. It is the best place to be right now, in my opinion. But 2021 was absolutely amazing, and how this ties back to this thread is because ARPA was basically introduced in 2021, and again, it was just lots and lots of free money for people. And the reason that that's important is that when you've got lots and lots of free money, the reason that relates to these markets is that you are going to see two things happen. Number one, you're going to see just a lot of inflation, which, you know, in and of itself, because, you know, how do you pay for it, right? If you're not raising taxes, you're printing money. So you're going to see inflation, so that's more money entering the economy, which naturally will water everything down, but also bring speculative investments up. So that's the single biggest factor, and it's the reason that you've clicked on the video. So you can click off now, and you'll have enough information. But the second reason, and I think this is also really, really big, is because people who receive the money aren't necessarily going to just spend it on, you know, childcare costs, or, you know, whatever it may be. You know, a lot of the time when people have received all of this free money, and we're going to go through this because there's more. There's income tax credits, which is kind of the same thing. You just get money back on your income tax. You know, you can write off some of your some of your health insurance costs and get, you know, tax write-offs on that. You know, this is slightly different, and then housing incentives. You know, all of these kind of extra money back things, you know, a lot of the time when people get that extra money, yeah, sure, they're going to spend it on the things that they're intended for, but a lot of people are also going to spend them on investments, you know, thinking that this is the right thing for them, which is, you know, neither here nor there. I'm not going to comment on whether that's a good thing or not. I certainly think I would if I was in that position, so I can understand it. But that's important for us to know, because it means that there's two ways money is going to enter the market, potentially. You know, the first way is just kind of speculative, normal people that want to, you know, get into the market, which is, by the way, like a crazy market in terms of how it's growing. You can't underestimate that. I mean, Robinhood is all the proof that you need that this is actually the direction that things are going in. So that's number one. But then number two, it's also just keeping in mind that, you know, we do have just more money in the economy, and that does usually lead to you know, kind of more money entering the markets. That's exactly what happened in 2021. And so not only is Kamala, according to this, going to be restoring ARPA, but she's also going to be making it bigger. Again, just completely typically in line with what a Democrat left-wing government would do. You know, so that makes it easy for us to imagine what the results would be. You know, so that's very, very good. Now, in terms of kind of additional things in here that are interesting, we've got the tax incentive for building starter homes. So again, this is just going to, you know, ideally the way, you know, it's written in theory, it's going to just encourage, you know, more low-income housing to be built. So that's absolutely great. And what I found really interesting, and the reason that I like this guy's thread here, is or her, I don't know, this person is anonymous, is this person writes, while this is only part 1 of the economic plan, I would really like to see the cost impact of these changes, right? So that's the thing, is that all of these things are going to reduce the government's taxation. It's gonna reduce what the government makes, and the reason that this is so important, and by the way, just to show you the scale of this, it's $1.6 trillion over 10 years, just for the child tax credit expansion, which is only one aspect of her tax proposal here. So there is a lot here, and just for one aspect, and this is an estimate, it could be more, it could be less, a lot of numbers are bullshit and made up, but I think a big number, right? I don't know if it's 1.6 or half a billion or many, many trillions, but it'll obviously be a big number. You know, you're gonna have to pay for that somehow. And again, you know, there's two weapons. There's increasing tax and there's increasing inflation. So, you know, what I think is really interesting is again, you know, the profile here is describing they would all require increases in other taxes, either directly, so taxes, or indirectly, so inflation. And then, you know, just a reminder that there is a kind of tax raise on the horizon. You know, the United States tax rate for corporation tax isn't super high compared to what you imagine the U.S. being, right? And of course other Western governments. It's a little bit lower than, you know, it's on the low end of average, I guess you could say. So, you know, obviously, you know, 2 consecutive terms of a Democrat government, that's probably going to end up coming down. Going up. And again, you know, there's a lot to keep in mind there. So, you know, what does that all mean for the markets? Well, I think what's really, really important is, you know, if we go back to that same year, 2021, and really look at what happened here, we have got a chart that tells a lot of stories. You know, if we just kind of mark off 2021, where was this? This is the end of December. Okay, and then we take the end of December 2021. So between these two lines is 2021, and obviously this continues until June of 22. There is rampant inflation. I mean, it is quick. It is very, very quick. It is very steep. I mean, I wanna put this in perspective, because a lot of people, like, everybody knows that there's inflation, but these are charts on a screen, right? Like, I'm not interested in you just knowing that there's been inflation recently. I want you to know the extent of it, and I want you to see it. I want you to actually see it in front of you. And before I even show you this chart, you need to keep in mind that the way they were printing data like this, you know, it required certain definitions, and they changed those definitions, and they have been going easier on themselves the way they define inflation. So everything that you're seeing right now is a watered down version of reality, and the order of magnitude that it's watered down is to the extent of potentially 3 or 4x. So keep that in mind. It's potentially 3 to 4 times worse, you know, in real life. And, you know, the conversation gets a little bit political. That's why we're not going there. But it's very likely that the real figures for inflation are higher than this, and you know this, right? You're not stupid. You know this. You've seen the prices of things that you're buying in your life go up by significantly more than the numbers I'm about to show you. But stick with me. We're making a point. You know, we saw from 2015. I know you can't see this because of my face, but from 2015 we saw a rate of negative 0.22%. It went up to 3%, okay? So that is quite a change. It went up by 3 percentage points there. It took 1,200 days, which, I don't know, 3 years sounds about right. Yeah, it was about 3 years. And so that was about 3%. Now, let's look at this. This is 2020 to 2022. This is a 2-year period, and it goes up by 9 percentage points, right? So that puts it in perspective for you, okay? You're looking at a shorter time frame of it's about 33% shorter than this, right? It's about, what is this? Sorry, it's about 33% shorter than this, right? This is 1,200 days. This is 700-800 days. Okay, it's a little bit shorter, and it's 3 times more inflation. So that really puts it in perspective for you just how much inflation happened at that time. And that's why, you know, you can't really run laps thinking that you've made a victory for yourself financially if you didn't make at least 3 times your money in this time period. And many people didn't. And that's why I think it's actually kind of a really depressing conversation. To be fair, you still made money if you made substantially less than 3 times, but it depends on how ambitious you are for these kind of conversations, because inflation really steals a lot of your, you know, everybody knows this. It steals a lot of your returns. It steals a lot of your wealth, you know, and so the bar, I think, is quite high for anybody that, you know, really wants to make money. Keep that in mind. I think that's important. But obviously, lots and lots happening here. Again, if we kind of dive into these numbers here, you're still looking at, you know, 400 days and going up by 1.44, right? So if we take, for example, over here, this was a 122 day period, and you're up by 1.3%, right? Over here, it takes 400 days, and you're up by the same 1.3%. So, you know, if we look at 400 days, let's just extend this out. This is 400 days, you're up by 5%, right? So, I mean, you know, the numbers aren't even close. 1.4% compared to 5% for the same damn time period. You know, it is overwhelmingly clear that a lot happened in this time frame. And, you know, you got to ask the questions of, like, well, why did this happen? How was this possible? It's usually just the government, right? I mean, there's a lot of factors that come into it. A lot. Commodities, big factor. Nobody really talks about this. Commodities, right? If the price of raw materials, of oil goes up, everything gets more expensive. That's inflation, right? So there is a lot. It's not just money printing. You know, there's a lot that ties into it. It's a more complex conversation, but governments are a big part of it, and I think what's overwhelmingly clear is that the policies implemented after 2020 significantly contributed to the inflation, which significantly contributed to our gains in the markets. So if it happens again, I think it's very fair to assume that we could be seeing strong gains in the market starting as early as this election. And you know, and I think it's an interesting one. If you guys are interested, let me know, and I can make the same thing for Trump. You know, look, as you can tell, I'm interested in discussing policy. I'm interested in discussing, you know, things that are actually relevant, you know, without getting into hot-headed debates about, you know, who has a bad personality or whatever, because, you know, we're all doing those discussions anywhere, but you don't want to hear it from me. What you want to hear from me is what this could mean for the markets, and that's what I want to talk about, because that's the only thing I care about anyway, right? I'm not here, you know, to discuss the boring stuff. We want to talk about if this is going to put money in our pockets. So let me know if you want to see my thoughts on the Trump situation in the comment section down below. As you can tell, I've been experimenting with a couple different kind of video styles lately, seeing what you guys like, you know, and if there's something that you guys love or an idea that you get, then let me know. The bottom line is that you can expect total transparency and commitment to truth from me when I make these videos. I will do my absolute best. So if there's anything that you want my approach on, you know, then let me know in the comment section as well. But again, you know, to kind of tie that back to Bitcoin, this is very clearly a case where I still believe that in the lead up to the election, regardless of who gets elected, regardless of how low Bitcoin goes, I think Bitcoin is going to end up significantly higher than its current price point. I still believe Bitcoin is going to set brand new all-time highs. I think it's probably going to happen before the election as well. So I think that this market is in a good place. I'm excited for it, and I think that the best place to be trading all of this is going to be on Bybit or Blowfin, linked down below. Bybit has launched their Apex DEX, which is a decentralized exchange, so check that out if you want to be trading on a decentralized exchange. And Blowfin offers you the opportunity to trade with no KYC, which means no pictures of yourself or your passport, and you're going to get thousands of dollars in cash bonuses and so on when you start trading using my link below. As usual, be very careful that you are checking your country's local regulations, because some countries have banned these exchanges, and if you're in one of those, you can't use them. Super cool offers though. If you are allowed to, and if you're interested, then check them out, because there are huge bonuses available that will help you kind of kickstart your trading and give you nice big head starts in your journey. X is the place to be. You're going to be getting more exclusive content from me on Twitter, so go check it out. You know, we've already started to talk a little bit about more analysis stuff. This Tesla video is still waiting for you if you haven't seen it already. There's going to be more exclusive content on there. I'm not going to upload it on YouTube. Go check it out if you want to see it over there. But with that, ladies and gents, thank you all very much for tuning in. You know what to do. Hit up those likes, subscribe, tick the bell. Communicate as much with me as you like about this content format and future ones that you want to see, because I want to know what you guys want me to bring. And I'll see you all in the next one. Cheers.